Hey folks, my name is Doug Pardick, independent financial advisor with Talon Wealth Strategies. We are a full service, comprehensive financial planning firm headquartered right here in beautiful Littleton, Colorado. Hey, our mission is to strengthen families by helping folks make excellent financial decisions. And one way we do this is by providing education. So I've got a YouTube channel, I've got my website, and underneath my blog, I've got all these videos on different investment topics, including market updates. And today, this is July 19th, 2020, we're doing a market update, looking back over the last 6 months, and then we're going to focus on the future and where we should be looking for opportunities going forward. So let's get into it. Let's talk about the obvious. You know, the coronavirus has had a major impact on the world, on the global economy, on the U.S. economy, and also on stock markets throughout the world. And right now, if you look at this chart, the blue line is indicating a spike in confirmed cases. So here in mid-July, we're now seeing 70,000 new cases a day, and the fatality rate is now around 140,000 Americans have succumbed to the coronavirus. So it's devastating. This is horrible news. This is much worse than the flu, and and we got a long way to go to get through this. There's vaccines in work. I think there's 140 vaccines going through trials right now. So there is a lot of hope that eventually we're going to see the end of this, but it's going to take some time and there's some uncertainty. There is good news right now. There is very good medical treatments. And since April, the medical community has learned a lot about how to take care of patients. And we see that the fatality rate has really come down substantially. I think we're like 85% lower than where we were in April. So this is a really good sign. However, with these new infection rates, we do need to watch these numbers and see if the fatality rate or the death rate begins to climb. So we'll be watching that. So what impact did the coronavirus have on the economy? Well, we had a very big recession, folks. And looking at this chart, a negative 12.8% contraction in the US economy. So looking at history, this is a very big, very deep economic recession for our country. And it's going to take a long time for our economy to get back to even. Now, if you look at the US stock market, we did go into a bear market. We did it very quickly. We did it in a very short period of time. And a bear market is when the stock market, and this is indicated by the S&P 500, declined 20% or more. When it does that, that's a bear market. All right, so we did that. The stock market went down 33.9% in about a 3.5 week period. The good news is it rebounded fairly quickly over the next several months. And as of mid-July, we are now back to even from where we started the year. And so this is good news. The market rebounded much faster than most people probably anticipated. Here's a look back at the 5-year of the S&P 500. So it's been growing quite a bit, but we've had some pretty good volatility in 2018 and again here in 2020. So what are some of the lessons that we investors need to remember as we look back on this bear market in this economic recession? And there's a couple things I want you to take away from this. Don't try to time the market. When the market's dropping that much and your stocks are plummeting, that is the worst time to sell because you just don't know when the good returns are going to come. And in this case, the good returns came very quickly after the bad returns. And it went down 34%, but we've already rebounded 44%. And we are getting close to those all-time highs again. And it was a quick rebound. But for those people that try to time the market, it doesn't work very well. And another lesson to remember is for short-term investing, the stock market is a bad place to invest. But for your long-term goals, I think there's a lot of history here that says stock market is still a really good place to invest your money, to grow your money over time, to create wealth, and to reach your financial goals and stay ahead of inflation. Stocks are still a really good strategy for your long-term goals. And bucketing works. So my clients, especially those that are in retirement, we have been building the bucket system with their financial plan. And let me just show you how this works really quickly. When you're saving for your goals, your short-term goals, your money goes into bucket one. Bucket one is going to be your conservative investments. We're talking cash, money market, CDs, and instruments that have very low volatility, like perhaps short-term bonds. All right, but for your goals in years 6 through 10, so let's say you're saving for that mountain house that you want to get in 7 years, or you're in retirement and you know you're going to have expenses, you're going to have withdrawals coming off your portfolio in years 7 through 10, then bucket 2 is a good place to put money. Not a lot in the stock market because you don't want to risk it too much, but you want investments that are going to have decent returns, keep up with inflation is one of the goals, and not too much volatility. And then for your long-term goals, bucket 3 is where you're going to have much more volatility, but more potential for growth, and that's where you're going to have more stock market exposure. And here's a chart that shows why we build our buckets the way we do. There's 3 portfolio here. In the green is a stock portfolio, 100%. In the blue is bonds, and in the gray is a blend between stocks and bonds. So you can stop the video and take a look at this, but I want you to focus for a moment on the 5-year rolling periods. If we've got a goal that's coming up in 5 years, we see that a green portfolio, the stock, could lose you money. So let's not put all your investments in bucket 2 into a pure stock portfolio. And you don't want to do a pure bond portfolio because that has historically shown you could lose money. But a blended portfolio, historically going back to 1950, has not lost money. Now those are previous returns, they're historical returns, they're good to look at, but there's no guarantee on future results. And you've heard me say that before, and I'll say it again, but it does give us an indication of how we can build your portfolio for your short-term goals, intermediate-term goals, and your long-term goals. So let's look beyond the crisis. Eventually, COVID-19 is going to go away. There's going to be a vaccine, and we're going to get back to business as usual. It might be a little bit different normal, but it's going to be, we're going to get to the other side of this. So when you're investing for your long-term goals, you got to look beyond the crisis and look for opportunities. There has been a ton of money dumped into the money supply. So the federal government has stepped up. The Fed has come in and infused a ton of cash into savings accounts, cash accounts, bank payroll accounts. We have set record levels in the amount of cash that has gone into these accounts, and eventually that money is going to be unleashed into the economy. When the consumers feel confident again and they want to start taking trips, they're going to start spending that money and improving their homes, getting a new car, all that kind of stuff. That money is going to flow into the economy, and inflation is going to pick up, but corporations, their earnings and profits are going to pick up, and this is usually a very good thing for stock prices. So we see this as a high probability of happening later on in 2021, 2022. So there could be really good returns in the stock market because of all this money flowing into the economy once we get beyond the crisis. All right. So another thing that I want you to be aware of is that I do teach classes once a semester. I did one in the spring. We'll do another one in the fall. It'll be virtual. It's on Financial Planning 101, learning about investing, learning about budgeting. If you're interested in this or a family member is interested in this, please send them my number. Again, my name is Doug Pardick with Talon Wealth Strategies, 303-951-5987. We're here to be a resource. We're here to educate. And if I'm not your financial advisor, give us a call. Check us out. We'd love to talk to you. And we hope and pray you have a good rest of 2020 and beyond. And again, we're here for you. Take care.